Welcome to Friday Takeaway. This week was a bit of a bloodbath on stock markets. On the anniversary of the Dutch tulip bulb crash in 1637, US share markets began a multi-day rout, prompting comparisons with the global financial crisis as fears that faster rate hikes would trigger a recession. Both the Dow and S&P were among major global indexes, relinquishing all their 2018 gains. Meanwhile, Elon Musk's SpaceX successfully launched the world's largest rocket, capable of carrying 140,000 pounds into orbit, twice that of the next biggest rocket. SpaceX is expected to send heavy communication satellites into orbits around the Earth, but is also capable of carrying cargo and human astronauts to and from the moon. The PM in Malaysia has announced a bunch of measures to increase market interest, including easier margin financing, intraday short selling, and fee waivers on trading and clearing fees. He also announced the establishment of a Malaysia-Singapore Connect, but this time promising joint market regulation and better post-trade arrangements like stock clearing and settlements. On to the FBM KLCI. As at 10 o'clock this morning, the index was down 1.2% to 1,817 points. That's still down nearly 3% from last Friday's closing, but year-to-date the KLCI is still up over 1.2%. Next up, some big weekly movers. Sapura Energy Berhad saw some nice contract boosts. They are a global oil and gas services firm which does engineering, fabrication, drilling and exploration of oil and gas fields, and the company is controlled by Tan Sri Sharil Shamsuddin. Now this week they announced their first contract wins of this year, amounting to some 905 million ringgit. 4 from Malaysia, 1 from India, which means their current order book now stands at around 16 billion ringgit. Today, their shares are down 2.1% to 69 cents, and truthfully, their shares have been pummeled the last few months, down 62% over the whole period of 12 months and plunging 27% in the last month alone. Now, energy stocks have borne the brunt of the broad market sell-off, while this week's data shows American drillers are still pumping away, even though crude stockpiles hit 2 million barrels. West Texas Index oil is now at a one-month low, below $62 a barrel, while Brent, the benchmark, is around $65 a barrel. MIDF says the recent broad market sell-off offers an opportunistic entry, and they maintain a trading buy in the stock with an unchanged target price of 1 ringgit and 1 cent. Now, Bursa Malaysia Berhad, they saw a boost on their shares thanks to a linked deal. Now, Bursa Malaysia operate the country's stock exchange, and apart from that, they also act as a frontline regulator. Spurred by strong equities income last year, FY17 net profit beat forecasts, giving shareholders a 15% jump in full-year net profit. The recent market initiatives and Singapore tie-up should also boost trading volumes and cross-border interest with Singapore. Today, their shares are down 0.7% to 1084, but are still up some 8% so far this year. While the broad market sell-off for 4-1, market pundits fear that this could be the start of a massive risk-off phase, with the volatility set to continue for now. Now, CIMB says they're still recommending a hold on Bursa Malaysia due to concerns over their contraction in derivative income and the obvious risks in the equities market as well. Still, CIMB raised FY18 to FY19 forecast EPS forecast by 3.2% and maintained a target price of 10 ringgit 40 cents.